Welcome to Small Caps. My name's Kerry Stevenson, and today I'm delighted that we're talking with E.B. Tucker, gold commentator, director of Metallo Royalty and streaming, and more importantly for everybody out there, he's just recently written a book called Why Gold? Why Now? The War on Your Wealth and How to Win It. E.B. Tucker, welcome to the program.
Thanks for having me.
It's great to have you on the program, EB. I really want to get into why you wrote the book, Why Gold, Why Now? Clearly, we've got a pandemic on our hands. There's a lot of confusion. We've got zero or in some cases negative interest rates, but there's a lot of people out there that don't understand why they should even own gold. They don't understand how they should protect their wealth. Here in Australia, as an example, people are still piling into the real estate industry. And really, gold is not on very many people's radar. Why do you see, first of all, why did you write the book? And I believe you only took 23 days to write this book.
That is true. That is true. I was having a conversation with, I have a Zen teacher. He's about 5'3" and very old, and he's really a character. And he has some money. In fact, he drives a Porsche, and his license plate says "Awake." You know, and he says that you don't have to be poor to be a Zen enthusiast, which is true. So anyway, so he was telling me, he's saying, listen, I got to get some gold. I mean, something's not right out there. And so I'm explaining to him how to get some gold. And he calls his broker who says, well, it's illegal for me to buy you gold in your accounts. And he relays that to me and says he didn't want the guy to lose his license. And I thought, this is totally insane. I mean, the gold market has been so hated for so long, and it's been so off the radar that there's grown people, you know, his advisors in his 60s, who their whole entire life, they've never understood the purpose of gold. And so I said, I have to write this book. And so I sat down and I wrote 2,000 words a day for 23 days, 50,000 word book. And it took 21 days to edit and format the book. You know, so it's actually quite complicated to do all that. That was a learning process for me. I just wrote it, and then I said, well, here, it's done. But now the book's available on Amazon as a Kindle or paperback, around the world in paperback, and also Audible as a audiobook. You can have, I'll read the book to you. It takes 5 hours. But a couple of things I think we should touch on, because as you can imagine, I've been all over, you know, giving presentations about this and trying to illustrate why this is important. And one thing that helps is this is the amount of money it takes to buy an ounce of gold today. So this is a stack of 1,800 US dollars. That's what that looks like today.
Bills?
Yeah.
$100 bills.
No, those are ones. Yeah, these are ones.
Okay, so
Yep.
$1 bills,
Yep.
and there's 1,800 of them.
Correct. This is what it takes to buy an ounce of gold. I mean, assuming no dealer premium or something, right, for the coin, right? Just a straight gold cost. Okay, so this is $20. And this was when my grandfather was a teenager. This is how many dollar bills it took to buy an ounce of gold in the US, $20. So what happened? I mean, this is the ounce of gold, okay? So this has not changed at all. I mean, my grandfather could have bought almost the same coin, except for it was a double eagle. You know, this is a regular, this is a current modern day eagle. You know, so they had a double, this came back in 1986. But it's the same thing. I mean, 1 ounce of gold was 1 troy ounce of gold back then. You know, and what happened was the dollar buys less. What happened was the dollar lost value. So you know, if my grandfather had put 1,000 US dollars in an envelope for me, it's still worth $1,000 today, which doesn't do me very much good. I can't even fly economy class to come and see you in person. It's impossible, right? I wouldn't even get halfway. But if he had put that $1,000 into gold and put it in an envelope, it would be worth $85,000 today. So what we try to show people is that all the arguments against gold are right. It's an old relic of a bygone era. I mean, you know, kings and tribal leaders and pirates and everyone wanted the gold back then. To some degree, it's still the case today. And it doesn't really do very much. I mean, if you're in a time of interest rates are slowly going down and monetary policies under control and the economy's growing, you don't really need that much gold. Maybe you have a little bit of it around or something. But today, it's more important than ever because, to your point, people have lost their minds speculating. The world debt pile is approaching $300 trillion. The people that are buying real estate where you are, I know some of these people doing this, they will tell you that it's all about being able to sell it to someone else at a higher price. They're not buying it for yield. I mean, real estate depreciates at 2 to 3% per year. That means if you own the property for 30 years, you're going to almost rebuild it. You know, you're going to put a new kitchen and a new roof and a new water heater and paint the thing several times and fix all this different stuff, you know, and then add property taxes on top of that. I mean, you're almost rebuilding the entire property every 25, 30 years. And that's called depreciation. So people will buy these places and they're making 1 or 2% and they're losing all that in depreciation. So what they're doing is they're hoping to sell it to someone else at a higher price. So they're betting on the price to go up.
EB, I will say this, but real estate in Australia has done very well over the years, and it does give you an income if it's an investment property and you're renting it. So for some people, it is a good way for them to get, I guess, passive income. So it's not all about it's losing its face value, if you see what I mean.
Sure, yeah, and in the U.S., people always give you the number that they're receiving for the income, but they don't factor in the rising property taxes, the rising insurance cost, the maintenance cost, loss of rent. They don't ever factor any of these things, and they say, "Oh, I'm making 5%." Okay, well, what's the net on that? It could be zero, it could be negative, and what you find is that they say, "Yeah, but you know, you always make it up on the back end when you sell the thing." Is that true? I mean, maybe it's going to be true in the future, but with gold, nothing needs to happen. So with gold, you don't have any tenants to pay you. You don't have any other than keeping it secured in a vault, which is pretty easy to do. And so my point is, this is a unique time when that actually matters. And so I think in the coming years, gold's going to become the sought after asset of the world, because you've got $11 trillion worth of gold in the world, and you're closing in on $300 trillion of the debt. And so that 11 trillion can easily go to, let's just say 15. I mean, it's really conservative to think it's 40%, you're into the low 2000s. I mean, I think that's a really soft approach, you know, to what's happening now. Gold is not a speculative investment. I mean, you're not hoping to make a killing off of your gold. What you're trying to do is preserve your wealth. And even if you have only $1,000 in savings, that's wealth. We're not talking about billionaires. We're talking about the result of you spending less than you earn and saving the difference for a better tomorrow. That's wealth. And so that's what we're all after. The relative scale doesn't really matter. And so gold is a time where it's time to capture that wealth and to preserve it so that you can have it in the future.
Well, you know, I think one of the challenges for people that I speak to is it all seems too confusing. There's gold bars, there's coins. Do I buy a Krugerrand, or do I buy an Eagle, or do I buy a Perth Mint product or an ABC bullion product? You know, there are too many choices. Now, what advice would you give to people? And I speak to so many people that say, Kerry, I don't care about gold. It's not an investment for me. I'm looking at ways where I can get money in, not just put it to one side. And so there's a lot of people confused, a lot of people that don't care.
To understand, and you've kind of got two pieces there. So first, for the people that don't care, I would say you think about gold as savings. Now I do believe there's going to be negative interest rates in the US, at least, probably around the world. The reason why that's going to happen is because every time there's a crisis, your first reaction is to stuff money into savings accounts and money market accounts and cash, because bad things are happening and you're going to need that money. So the money market funds in the US went up to 4.75 trillion during the virus pandemic in March and April. And so the reason why you're going to have negative rates is because the US Fed, has thrown everything it has to try to get the economy restarted. And it's not really getting restarted. And there's going to come a point where there's no more bonds for them to buy. Interest rates are already zero. And once those rates cross negative and you're being charged to keep your money at the bank, your first instinct is going to be to pull that money out and do something with it, which what that means is you'll stimulate the system, because that money, when you do something with it, if it's a real estate purchase or stock or take a trip, whatever it is, it's a stimulative effect on the economy. And the Fed used to have that power, and it's lost the power to do that. So second piece of your question, which is critical. Best thing I can tell you is when I started writing the book, it was going to be two parts. Why gold, which is how we got here. Why now, which is the urgency of doing something now before the inevitable happens. But it ended up being three parts because the how to do it part deserved its own section. So what we do is, I mean, if you've never even heard of gold, you can, by the time you're done reading this third part, you will understand what's going on because we walk through how much gold to have. So we give you a little kind of a formula, like a starting formula to help you think about what's appropriate. You know, like we give some examples of what might be appropriate. I'm not a financial advisor, so I'm not, you know, advising people specifically, but I give you the same formula that I use to kind of look at, do I have enough? Do I need more? Am I happy with everything that I have? I mean, if I'm 98% tech stocks or something, am I happy with that? I mean, you know, we kind of help you look at this from a holistic approach, which I think can help anyone. Then we say, come up with your percentage. Then what do? You've got physical gold, bullion. And so we walk you through bars, all the sizes. It's very easy. You know, you go from the James Bond good delivery bars, you know, that are about 700 grand for those or a little more. We go all the way down to grams, you know, which we explain at the end that the troy ounce is about 31.5 grams roughly. Some people buy 1 gram of gold. It's not really worth it. You know, by the time you know, pay the dealer premium and all these. So, but by the end of this chapter, you know exactly what that means. I mean, you know what the sizes are. And ultimately for most people, 1 ounce common coins are the way to go. And we think that U.S. Eagles, Canadian Maple Leafs, and Krugerrands are the best place to start. Now, no offense to your beautiful coins, okay, from the Perth Mint, but the fact is that there's 50 million Krugerrands in the world. And so when you talk about for the average person that's not going to become an expert in the gold field, it's nice to have the Krugerrand because you walk into a gold store and from Shanghai to San Francisco and they know exactly what the Krugerrand is, and they know what to pay you for it and everything. So then we go into the collectible coins, which is a no-fly zone. I mean, just stay out of that completely. But we explain to people how it works. I mean, we're like, look, this is what it means to have a collectible coin. And I personally love U.S. St. Gaudens coins, you know, from like 1908 to 1932. But I explain to people, I've been at this for 20 years, and I developed an affinity for these coins. I really enjoy them. It's kind of a coin collecting thing. That's a nice hobby, okay? But for the average person, it's you're only going to hurt yourself, and so don't fall prey to that. Yeah, don't.
Why?
You're going to get a phone call
gonna...
from the well, you're going to call up and you say, hey, I'd like to get a Krugerrand, and the dealer's going to say, well, have you considered the flowing haired half nickel from 1862, which while it's only a tenth of an ounce, I mean, it really could explode in value because they only made 1 million of them, and you never know what that could be worth one day. And it's very sad, but so many people say, okay, well, I'll take that. And so what happens is that they pay, there's a price for the gold, so that the gold in that coin might be worth 500, okay? That's meltable gold. But then the collector's premium is the additional price. And that's what's completely arbitrary. And so when I explain to people that some of my St. Gaudens coins have $1,000 in collectible value because they're somewhat rare, they've been certified, put into cases, they have ratings applied to them. It's a nice coin, and I could sell that at auction, you know, with paperwork and everything, and get a high price for that. But I really know what I'm doing. So I know about what that's worth. And my point is that you don't know anything about the flowing haired half nickel from the 19th century. And so to stumble into the gold world, you know, you can really hurt yourself, because what will happen is you'll pay $1,000 for the collector premium on that, and the collector premium might only be worth $25, you know, if that. Okay. And so to figure that world out is it's very tricky. Okay. And so we say, for now, if this is your first go, this is a way to stay safe, is 1 ounce coins of these sizes, you know, and so we have pictures of the coins in the book. If you get the Kindle version, you have color pictures of the book. You can literally take your Kindle or iPhone or whatever and say, I want this coin. Okay. And there's no mistaking it. And what you do from there is up to you. I mean, we go through mining stocks, which also are a danger zone. And then we go into royalty companies, which
why do you say mining stocks are a danger zone? I mean, it's rather like collectibles. So long as I always say to people, do your own research. Mining stocks are more speculative than actually having the physical gold. However, the returns can be spectacular, both up and down.
Yep, absolutely. And I give multiple examples in the book of site visits that I've been on to companies that found something, stock went up 4,000%, market slowed down, stock crashed 92%. Then, you know, company changed name, you know, raised more money, got another project, stock back up, you know, 750%. Okay, so I mean, I give real examples with photos of my partner, Brett Heath, CEO of Metal, and I ran a precious metals equity fund for years. And so I have all these great photos of us at these crazy sites. And I tell people, I mean, look, these guys, for instance, literally had a hole in the ground that was full of water, okay? And we showed up there, and the local staff told us that they wasted all the company's money, starting their own drilling company, overcharging the public company. There was never anything coming out of the ground. They ran out of money, the market crashed, and they just disappeared. Okay, so I'm not picking on these guys. I'm just saying, look, there are some amazing mining stock stories that come out, and you can see dramatic share price increases. And we haven't even started the bull market yet. I mean, we're just talking about, you know, we're just at the first inning of this. And so you're gonna see so many stock gains that you're gonna have guys that were running a cannabis company that ran out of money, and they say, let's just change the name to a gold company. This is going to happen, believe me, okay? And so that's all part of the bull market cycle. But we explain to people, look, I've been in this for a long time, and when I was running the fund, I would always notice that there would be people that had royalties on the mines. And it would be some guy or an LLC or whoever is getting, you know, 100 grand a quarter or something. And I'm thinking, who is this guy? How did he get the royalty? Well, usually he got the royalty because he discovered the asset 20 or 30 years ago, and he just has the royalty. And so my partner, Brett, and I came up with this idea. It's really Brett is the brains of the operation, not me. I've just been able to help him because we have such a long-term relationship, and I'm on the board. I've been able to structure the company and help steer it, but Brett's the brains of the operation. So what we did is we sent him to work to find these royalties on high quality assets. I mean, I don't mean juniors, okay? I mean Pan American Silver, Goldcorp, Newmont, CBH in Australia. You know, this is serious companies they don't decide on a whim to go into business mining. They say we're going to spend, you know, 250 million mining this. They really mean it. Okay, so find the people that own these royalties, and let's have them sell us those royalties for stock so that they become part of our company. And so what we end up with is a more diversified holding company of royalties, and we're going to pay a conservative price for them, and we're going to justify that by telling them they get stock. I mean, if they want cash, they can sell it to someone else who's going to be a high bidder. But if they're going to be part of this, we're not going to overpay for these things. We have to do deals that are accretive day one. Okay. So how's that worked out? Well, we've done 18 transactions. We have 50 royalties. It's about $250 million Canadian market cap. And the momentum is better now than at any point, you know, during the past. So how valuable can this business be? Well, in the book, I tell the story of Franco-Nevada, which some people know. They bought a $2 million royalty in the Carlin Trend in Nevada, and it's paid back over $1 billion, $1 billion in payments since the late 80s. Can you believe that? I mean, it's 2 million into over $1 billion, and it's still going. Okay. And so I walk people through that story. I mean, one of the founders has a book where he talks about it extensively and how they started to do this and everything. And so I explained to people what happened. It wasn't luck. I mean, they decided they were going to run out of money as a mining company. They were going to just issue shares endlessly to finance drilling, which was never bore any fruit. Okay, so they got this royalty from an oil and gas company was going out of business and had the royalty for sale in the classifieds in the Reno newspaper, and they bought this thing. And Barrick Gold came drilling right through and found gold strike. So I mean, so look, it's amazing. And so I tell people, I say, if Pierre Lassonde will tell you, this the former chairman of Franco, if you want to get lucky in the royalty business, what you do is you pay the right price, which is you be very conservative, for mineral royalties adjacent to productive areas. You don't go buy the middle of Saskatchewan, bunch of moose pasture and just say maybe someday somebody will buy gold there. You go next door to where there's already a 45 million ounces have come out of the ground or something. And that's what we've done with Metalla. I mean, we just did this deal in South Dakota where we have a royalty on Core Mining's, one of their most productive assets. Yeah, that cash flows today. It's in America. It's right near Mount Rushmore, the famous American is where they have all the presidents. Okay, I mean, it's right down the road from that, so you can visit the mine and Mount Rushmore. So then in Nevada we have a nice package of royalties that's on Barrick. Barrick is working a package, and it's Cortez Trend area. And so my point is that we've for 42 months we've accumulated these royalties. We're still doing this. See, the stock's up about 70% per year compound average growth. And still, I feel like people still don't know the story, which is shocking. So the reason why I'm telling you this is we go through all these things in the book of how to buy the gold. And then these other areas, the mining stocks, are very fair about how we characterize them. But then we say, look, the royalty business, there's literally nothing like it. I mean, I don't know of a business as profitable as the royalty business. And I compare it to Google, Facebook, Amazon. There's no comparison. I mean, Franco-Nevada is 20 something billion market cap with 25 employees. I mean, it's unbelievable. And so how did they do it? They did it by buying royalties, paying a low price, buying royalties near other. They didn't do it by loaning money to juniors. Common misconception. They did it by buying royalties near productive zones in the world, and we've done the same thing.
It is fascinating. And the royalty business, if people want to look at something like that, it is a way that you again can protect your wealth, and it's all about that. Now, you mentioned a moment ago we're at the start of a bull market. Can you just explain your rationale behind why you say that?
Definitely. So we've yet to take out the 2011 high in this market. So let's just walk people backwards a little bit through how we knew this was going to happen. December 2015 was the ultimate low for gold, 1,050. I remember exactly what was happening. I attended a conference around that time. I remember seeing grown men in the twilight of their working career with their face down in their hands saying, the assets are worthless. I mean, we can't raise money. We can't pull the gold out of the ground. I'm just retiring I'm just quitting and finishing, and I'm going out with a whimper. Yeah, I remember this. I mean, it was really bad. Okay, so this was a definitive time. It was an ultimate low. We had a little rally in beginning of 16 where things started turning. That's when Brett and I put this company together because we thought, you could see the wind blowing. Okay, you could see this coming in. So what happens? Well, we go through that little blip in 16. It's still pretty dead. We have companies losing money, shuttering projects. You have the majors saying we spent $1 billion over here trying to put this mine in production. We're going to cancel it and stop the bleeding. Then you start seeing all these mergers where you have these companies folding into each other at no premium. Okay, so remember, you have like Goldcorp, Newmont. I mean, you have two really confident powerhouse CEOs who just agree to a net even.
That's amazing.
We'll just save on the office space. I mean, that's okay. Well, at the top of the bull market, it's the opposite. I'm going to need a $50 million golden parachute to leave the driver's seat. I mean, that's how these mergers work out when they're at the top of the market. Okay, so that all happened. And so now you still have no understanding of gold. I mean, I talk to hedge funds, family offices, high net worth investors, all these people. Okay, these people still, gold is stupid. So, okay, so how much cryptocurrency do you have? Oh yeah, well, we bought some of that. Okay, well, look, I'm not saying that that's not relevant, but what I am saying is that, you know, this is a unique asset for this time. It's a credit problem. You're in a credit system. The
Yeah.
system has to keep expanding. Okay, so separate from your crypto and all these other things you got going on, okay, you have to see that the Fed's turning everyone into speculators. All right, the system has got to keep growing. GDP has to keep growing. They created $12 trillion around the world in, you know, government-based stimulus because of the virus situation. The virus situation is coming back in the US. I mean, believe me, like, I went to dinner Sunday night, couldn't even sit down until they spray your hands with everything.
Wow.
Yes, 80% of the restaurant is empty. The manager says they shrunk the menu in half. Everyone's terrified to come out, you know, to dine out. Okay, so it's not good, all right? And, you know, we have race riots in the US, and there's a lot of things happening right now that are not what you would expect to see in a rip-roaring, you know, bullish capitalist expansion. Okay, so all I'm saying, I'm not getting into the details. I'm just saying business is not that great. Okay, and meanwhile, you've got people living as if there's no problem, and there is a huge problem. The U.S. government's going to run a $3.5 at least trillion deficit this year. You know, it's about 15% or more of GDP, getting close to 20, and it's a big issue, right? And so gold is the antidote for what's coming during this time. And people just, the reason why I say we're in the early innings, okay, first inning, I think, is because you haven't taken out the old high. You don't see any coverage in the papers. You see people speculating in Hertz, bankrupt car rental stock in the US, but not speculating in gold stocks. I mean, anybody watching this that's been around for a gold bull market knows when this sucker goes, you've never seen anything like it. I mean, ABC Exploration Company that has no property can sell stock for $1, right? Because that's how excited people get about gold stocks. Forget about it. I mean, look, I've got the best royalty company, in my opinion, at least, out there, and I've got to spend an hour on the phone explaining to people that we haven't just been 18 times lucky. You know, we've bought 50 tier one royalties that we think are fabulous assets, and we're gonna buy more of them. And they say, yeah, I'm gonna still need more convincing. Well, at the end of this market, I could say we're gonna look for gold on Mars, and they say we're in for that. That's what we want a piece of. So you'll see as we move through the $1,900 high in the U.S., which will happen this year, and we start moving into the 2000s, you'll see more mainstream attention. You'll see more articles in the mainstream papers explaining how gold works and all these things. Then you'll see people get interested, then buy the speculative stocks, and then we'll be off into a bull market, and eventually that'll crash and, you know, hurt lots of people. But that's a long way out in the game.
But EB, what do you say to those people that, you know, we've kicked the can down the road for, you know, so many years, and governments can, you know, they're printing money out of thin air. Therefore, asset prices are going to continue to go up. I don't care about gold because I'm speculating on the share market, which doesn't show any signs of slowing down. And in fact, yeah, we had a blip, but, you know, we're back to almost all-time highs. So I still don't care about gold. Don't
stop doing that speculation. I don't advocate for completely stopping. I mean, I have young children. I bought them some stock. You know, I bought them some regular conventional type stocks that kind of need the market to keep going, because that's not something that you just want to say, I'm not going to participate in what's happening. In life, generally speaking, instead of having an idea of what you want to happen, the way to be successful in all parts of life is to look at what is happening. So yes, if they pump trillions and trillions of dollars into the market and the Fed buys junk bonds and they control all this stuff, you'd be crazy to not participate in this market. However, I also think you'd be crazy to say, maybe I'll just have like 3% of my assets in gold. I mean, and maybe I'll just have a couple shares of a royalty company, and that's it. Hey, that's it. I mean, like, look, the thing's up 70% plus a year for 3.5 years. I mean, how bad could it be? Okay. But I'm not saying you just abandon saying you want to have a couple of tech stocks or something. I mean, yeah, I mean, that's the market today. I mean, how long can that go on? Maybe for a while. I mean, I remember in the 90s when I was getting involved in the market the first time, everyone thought there was a bubble in, you know, 97. I mean, they were talking this. Yeah, but if you just like went totally out of that, I mean, you watched a lot of fireworks
Yeah.
before it ultimately went off a cliff. I mean, so I think in life the best way to play this is to position yourself so that you have that exposure to gold, you have that exposure to royalty companies, and you also have something going on in the traditional market, but you're prepared. I mean, a lot of these people have zero gold, okay, like zero awareness of what's happening, zero plan for tomorrow, and 100% bankrupt hurt stock. I mean,
Yeah,
in similar things. It's crazy.
it is crazy, but there's a lot of people that are literally living paycheck to paycheck.
Yes.
And they haven't actually thought about saving anything. They'll go out and they'll buy the big plasma screen TV, but they won't think about tomorrow because it's that sort of immediate gratification. So,
of course. Now, this is never going to change. By the way, there's a lot of what you're describing is not. It's innate. It's a societal kind of conditioning that's not going to change. So let's not expect that everyone's going to change with this. I mean, and for most of your viewers, you know that probably, if you're honest, when you were younger, you didn't start out thinking this way. Life experiences make you think this way. Now, it's kind of like buying hurricane insurance after the storm. All right.
yeah.
So a lot of these people living the way that you're describing, what's going to happen is they'll try to start saving. They won't be able to save enough money. They'll try to start speculating. They'll speculate right off a cliff and all this stuff. And then they'll say, this is crazy. I got to blame someone. And also I got to start doing some things to prevent this from happening again, which, as you know, it's probably not going to be a hurricane right after the hurricane. I mean, it's just statistically, you have these events that happen, and the time you want the hurricane insurance is before the hurricane. So why not, take these steps now, okay? Be aware of what's going on, and at least learn about what's happening and learn about the numbers, and say to yourself, I mean, how long can it go? I mean, effectively, if the Fed pumps and pumps and pumps and then takes rates negative, pumps the economy even some more, does all these things, does MMT 0% to eternity. Oh yeah, I mean, this thing can keep going for a while longer. So we need to be ready for that. I mean, however, I do think that's a bullish environment for gold. I do think that there's a lot of people. I mean, I talk to extremely high net worth people in the U.S. from some name brand families that people would recognize, and they're saying, how do we get involved in gold? What are the allocations? I mean, what do we do? Okay, so these people realize
these are people that have not looked at gold in the past, but all of a sudden, why now?
I think the families have looked at gold in the past. I think there's been some generational skipping where you've had a lapse in that. I mean, like they remember older members of the family mentioning it and talking about times of trouble. And when we say times of trouble, what we describe in the book that's coming is a scenario where the value of your assets goes down and the cost of things you need goes up. It's very complicated because the government has flooded the markets with so much money, okay, that you have too much stuff. I mean, you have office towers that have 3% net rates of return, okay, for investors. I mean, you have too many luxury apartments. You have too many people that went to college to become lawyers. You have too much of this stuff. And so what happens is when you have too many lawyers is that the lawyers all can't make the kind of money they thought they were going to make. So they took massive loans to go to law school. Now there's too many lawyers. They start going to work. They can't make enough money to feed themselves and do loans. So they're a bartender at night or something. And then there's a coronavirus and now they can't do that anymore. So basically, you see how this works. My point is that example is a small example of what's happening overall in a world where the Fed has solved every problem with more money. Okay, yeah. So what happened in 2002, we explain this in the book as well, is that was the first time when the Fed circumvented the recession process. Because a recession is like a forest fire. It burns off the undergrowth of the forest so that you don't have a gigantic forest fire. So if you prevent forest fires, it sounds like a good idea. But 10, 15 years later, you have so much undergrowth that one little spark goes off and that thing roars for months and nothing can put it out. Okay. So
very apt given the fact that Australia suffered from exactly that scenario in January this year. Absolutely shocking. The undergrowth was too much. And a lot of people decimated from our fires down here. So
decimated.
Good analogy.
Yeah, and that happens in the economy because recession is the capitalist version of a normal forest fire. Because what recession does is sales slow and it puts pressure on the worst operators. If you have 5 people in the tire business or something, and business slows down, and one of the tire store operators has spent all his money on jet skis and taking trips and bought a bunch of beach condos and had a girlfriend and everything on the side. I mean, and he's totally irresponsible. Well, he goes out of business because he can't take care of everything. Whereas the guy that saved money, helped out working himself and was prudent, okay, and it didn't expand and brought his lunch to work every day, well, he's going to be fine. I mean, business is going to slow down and then it's going to get better and he'll be fine. That's a recession. We don't have those anymore. What we have is bubbles and crashes. So you go bubble, crash, bigger bubble, bigger crash, bigger bubble, bigger crash. And then at the end, you have a reset of the system.
Don't you think right now that the bubble is just, it's almost like it's being artificially inflated so that it never bursts? This bubble.
It has to be. So in defense of the Fed, they're actually wise. They realize you have to keep this thing inflating, and the goal is to keep it inflating by just a little bit every year, 2% every year or something. Okay, that's what they want to do right now. So that's the balancing act. When GDP falls, what happens is companies can't service their debt, revenues go down. All of a sudden, they can't refinance their debt. Because a lot of this debt is 2, 3, 4-year debt. It's not 30-year debt. These loans are fairly short. So already they can say, well, we can't refinance this. Sales are going down. Fed steps in to buy those bonds to keep them up at par, smooth everything out. So you're exactly correct. So how long can that go on? Probably for a while. I mean, if you had the power to create the money, and then you had the power to make the laws, and then you had the power to decide who survives and who fails, I don't know. You could probably go for a little while. I mean, certainly several years. I mean, so it's unknown how long that can go. Now, while it's going, okay, you have a chance to quietly buy some gold when no one's paying attention.
Right.
No one's paying attention, okay? No one. And in the end, I mean, ultimately, there'll be a lot of attention on gold. I mean, I wouldn't be surprised if they paint people that have gold as enemies of the state at some point, because gold's value will shine as this system runs into more and more trouble.
Absolutely. Now I've got 2 more questions. First of all, the likes of Harry Dent turning around and saying gold's going to go down to $1,000. He wouldn't put any money into gold whatsoever. What's your answer to that one?
If gold goes to $1,000, my suspicion is many other assets have been taken out at the knees. And it's kind of like in the Great Depression, if you had $1,000 worth of gold, it was still worth $1,000 when stocks were down 90%. So if gold's at 1,000, my question to Harry, who by the way lives not that far from me, my question for Harry would be, what does everything else look like? Because my suspicion is if you get into the weeds there, you're looking at a very difficult time for other assets.
Yeah.
Because gold has no counterparty risk, right? So if you think about it, the stocks, they have to have customers buying more and more and more of their product, okay? The apartment complex has to have tenants paying month on time and paying more money as time goes on, right? So everything depends on something. So gold depends on nothing. Well, you and I both know that the tenants of the apartment can't pay any more money, okay? They're paying as much as they can pay. People aren't really making any more money. I mean, incomes have risen a little bit, but they've not risen anywhere near the price of the assets. When you go back to 2000, I mean, people weren't making so little. I mean, they're making somewhat close to what they're making now. I mean, in the U.S., I don't have the numbers in front of me, but I mean, the household income at say 60 grand today or something, and I bet you it was probably 40, 20 years ago. So I mean, it's up, 50%. Meanwhile, the asset prices have ballooned. They've grown at a multiple of that. So how long can people afford it? Well, the question is, if you can keep the borrowing cost at zero or negative, they can afford it for a while longer. However, there comes a point in time where people say, well, that's no longer worth it. And so in Harry's world, $1,000 gold, let me see the rest of the assets.
Right. Good answer. E.B., I just want to finish up with one of the things that I think you said was everyone is in the money game. Everyone's, like it or not, we're all in the money game. But right now, the money game is in serious trouble. Now, we've just spoken about the fact that this can be kicked down the road for another few years. Give me your final thoughts on, I guess we've talked a little bit about hedging and diversifying. Like, don't sell your house and your children and go all in gold, but have some exposure to it. What would your advice be to people right now that have got that, as you said before, they're not awake, they don't understand it? I guess the first thing is go out and buy EB's book, Why Gold, Why Now? But should they be? I guess what's your final thoughts on what people should be doing right now? Because a lot of people are just going, it's all going to be okay. The pandemic's, it's around, but it's not really bothering me in terms of my financial situation.
Yeah, I mean, most people sense that something is wrong. Okay. And just remember that your whole life, educators and your bosses and all these people have encouraged you to not listen to your instincts, right? Remember when you're in school or something, they're telling you, don't do that and stop daydreaming. And well, when you get older, you realize it's the people that are daydreaming all the time that end up, making $100 million because they think of some crazy idea. It's the straight A student that has guaranteed servitude working in a cube forever. Okay. They never dream of something more, right? So your whole life, they've been trying to get you to stop listening to your instincts and instead to follow a program. And following the program right now means don't worry about this shutdown of the economy. Don't worry about all these debt problems. Don't worry about all this stuff. Just buy the stock index that we told you to buy some real estate, buy a little bit more real estate, buy a car, make payments on the car, have a high credit score, which, by the way, credit score is only good for borrowing more. Okay. So have a high credit score. Okay. Like, follow all these rules that we tell you to follow and stop listening to anyone that tells you otherwise. Okay. So when you say awake, just for one day, forget about all that stuff and think about awareness and walk around and use the skill that is an instinctual skill within you. You can wake it back up, okay, of awareness, and don't have any opinions. Just observe what's happening. I went to the restaurant Sunday night. The lady spraying me with a toxic disinfectant. I didn't want it on me. I can't be in there. There's no one in the restaurant. I can't hear anything she says because this is a full hazmat mask thing on. And yeah, it's ridiculous. And the manager's telling me, without customers, I don't think we can stay in business much longer. Okay, now this is anecdotal, right? This is one restaurant in one place. So you don't go making a lifetime of decisions off of one thing. However, awareness, you see something's not right. Your instinct tells you something about this is not right. I know for a fact that you can't get ahead in life by betting on bankrupt companies for very long. Something about this is not right. And once you do that, you're going to start having a new perspective. And in the book, we go through the book, first of all, is easy to read. That's what people need to understand, is that this book is written for people that want to learn, that are seeking more knowledge. It's not written for people that have a PhD in economics,
right?
Okay, because everybody has money, period. I mean, if you're an English teacher, then you're in the money game, because otherwise, why are you working? You could just teach to someone online for free. No, I have to have a job. Why do you have a job? I need money. Okay, yeah, you're in the money game. So like it or not, you better wake up and pay attention, because you're in that game. You're part of that game. And so it's time to wake up and to see what's happening. And you don't have to be afraid of it, because it doesn't mean anything other than you have some awareness about where this is headed, and then you'll know what to do about it.
Wow. You know what, AB, that was, I think the most important thing that I just got then, and I want to tell all of you out there, Why Gold, Why Now? It's a book that is made for every person. Like, it's easy. It's not technical. It's for you guys out there that just want to understand why gold should be a part of your reason to protect and potentially grow your wealth. But as EB and I both have said, we're not financial advisors. We're just very awake, and we're looking at the system and saying, it is time that you stopped being programmed and started waking up. So I'm going to put the link to EB's book down below, and I urge all of you to read it and to understand what's going on. Wake up, people. It's time to understand why gold, why now. EB, any final thoughts from you?
That's it. Thanks so much for having me, and let's come back in a few months and see if what happened, and we'll be held accountable for our thoughts. How about that?
I'd love to have you back on, because you say we're going to breach the earlier high of 1900 this year, potentially going up to 2.5. You know, when you've got interest rates at the bank and banks possibly charging you to keep your money there, perhaps now is the time to wake up and have a look at this. EB Tucker, thanks so much.
Thanks.